Hi, I'm Stephen Harris, a head trader for Falcon Global. The purpose of this video is to give you a general overview of the daily price guides concept. Included is a complete walkthrough of the daily price guides themselves. The day trader cheat sheet and daily price guides are designed to support the day trading futures or stock trader with an efficient, ready-to-print guide that incorporates multiple favorite trader concepts. The daily price guide is absolutely packed full of a ton of key information to support the day or short-term swing trader. What we do is bring all this information into a concise report that is built to be an indispensable reference all day during your trading activities. The guides are integrated into 4 interrelated market clusters and utilize both proactive and reactive support and resistance zones, as well as other supportive data points. These would include the classic floor trader and Camarilla pivot points, moving averages, stochastics, Fibonacci levels, prior day, week, and monthly summaries, volume and market profile. We also take a look at Crable patterns, Crable and Fisher stretch and pivot range, open range and calculated exhaustion levels, and market condition. These collected classic support and resistance tools enable the day trader to quickly determine areas of opportunity or likely chop, or areas of influence for the identification of entry and exit target locations. Currently, we focus on 16 key markets. The markets covered are the S&P futures, Russell futures, NASDAQ futures, and Dow futures. Then in the options markets, the SPX, RUT, NDX, and Indu. So all 4 index markets, both in the futures component and in the options component. Also for the futures traders, crude oil, euro, bonds, and gold. And then for our stock traders, the jumbo stocks, what we refer to as, the Apple, Amazon, Google, and Netflix, highly favored, of course, with many day traders. So we'll actually go through the actual guides and give a complete walkthrough. Remember that we shared earlier that the daily price guide is absolutely packed full of a ton of key information to support the day or short-term swing trader. What we do is bring all this information into the concise report to be built into an indispensable reference. I'll now walk you through what is covered. But keep in mind, there's a lot of different technical analysis techniques incorporated here, and for many of you, it's highly likely that a few of the concepts may be totally new to you. No worries. Just understand, the information is compiled here to support your trading. If new concepts are introduced, you can broaden your study to bring these new concepts into your trading as you find helpful. You may wish to pause in this video at this point and print off a copy of the key sheet and the example guide. This should make following me on the video much easier. Take note also of where we are in the video. You might find it helpful to review the walkthrough more than once. There's a lot of information packed into the guide, and it is worthwhile to have a complete understanding of what is available here. We're right at 4 minutes into the video. Okay, keep in mind that all this information has one purpose: to assist you in the identification of when and where you might want to initiate trades, and to fine-tune targets and stops. An aware trader will make many less mistakes in the placement of targets and stops with a more complete perspective as to where the visible and hidden levels of support and resistance might lie. Now, the next section here, I'm going to walk you through, and hopefully you do have a copy of this key sheet as well as an example guide in front of you. And this is going to be a bit free flow as we walk through the different sections. And there's a lot of stuff here, but I'm going to basically just kind of touch on each of the items here and give you a general orientation of what to expect in the guides. First of all, understand right across the top, each of our guides is color coded so that if you are trading multiple markets, you can visually identify which of the daily guides is a particular market cluster at just a glance. So do note that. Next thing to take a note of is that you'll see in the top of the column there'll be a reference to the symbol that is associated with all the data that is in the column below. And of course, on this particular key sheet, I've scrubbed out 3 of the markets. I just have 1 market here, and things are a little bit flexed in terms of their normal size and things like that in order to make it easy for you to follow along these concepts. But the primary guide, of course, has 4 even columns to represent the 4 different markets that we clustered together. Each of these 4 markets are clustered into one guide because they are often seen to trade either in correlation or in inverse relationship with each other, and it's very helpful to have an understanding, even if you don't perhaps trade that other market. Perhaps you're a crude oil trader, knowing what the dollar is doing as reflected by the bond position can be very key. So first of all, here's your symbol, and then notice this open box right here. This is for you to pencil in the open price once that cash market or that pit opens, depending on the particular market. And this can be a helpful reference point during the rest of the day. Next, you'll see we go into a number of metrics associated with the average true range for that particular symbol. I calculate for you the 5-day average true range, and then from there I calculate what 30% of that value would be and 40% of that value would be. Many day traders will use a target, which is a percent of the 5-day average true range. This gives you a volatility-based targeting approach and allows you to take larger targets when your particular market has expanded in its volatility, and then also be responsive and dial down those targets as the market's activity constricts. I'll also show you the 10-day average true range, and a couple things that can be helpful from this. Sometimes it's helpful to compare the 5-day versus the 10-day. So in essence, the last week's worth of trading activity versus the last 2 weeks. In this next section, we take a look at the 10-day average true range, average open to high distance. So for this particular market, we've had, and the time frame that was reflected here, an average between the open and the high of about 4 points, and you'll notice an average of the open to the low of about 13 points. So this has clearly been a bearish time for this market, and the market has not had much ability in the last couple weeks of trading to be able to make much of a move to the top side. This can have a clear influence in terms of your targeting. So if you were to take a long trade on this market right now, you'd be more inclined to take shorter distance targets to the upside and then to take larger targets perhaps to the downside. So very key insights into what the nature of the move, how much move range has been experienced in recent trading days. And then the next figure is the actual range high to low of the previous day in that market. Crable stretch, Fisher value, and Toby Crable and Fisher, these are both very well-known traders, classic traders. You may want to take a look at Toby Crable's work on open range. Also, Fisher has done some work along these lines, and those of you who are followers of these gurus will know what to do with these values. Then ADX, obviously ADX goes into how much trend strength, and the higher the number is here, the stronger the trend has been. So that's an indication for you as to what to expect in terms of just how much trending power you have for that particular market. Then I take and average the 4 indices and give an average of the 4 indices average ADX. I take a look at the trending power of the ES and the current ES daily trending strength. I have a number of areas where I go into market condition. So for example, strong bull, weak bull, neutral, and then of course for the reverse. And then on various time frames, the short-term trend, the intermediate-term trend, the primary major term trend, bullish, bearish, these kinds of things. Market condition count. This is a measure of just how likely the market is to be in an extreme, and then we assess a term there for that. Then I go into a little bit on the commitment of traders, class of trader, and status. So in other words, the commercial traders for the ES at this point was bullish, small traders were bearish. The initial open range bias, again, Toby Crable work, but based on the close price action of the previous day, the initial open range bias would be established, and that will be reported here. Now obviously this can be trumped by a overnight gap repositioning relative to the days before pivot. So again, those of you who are followers of the open range theories will understand what that means. So then we get into if a Crable pattern is available for a particular market, I'll mention that there. That might be like an N7, narrowest day in the last 7 days, these kinds of things. Some markets have Crable patterns available and some don't from the resources that I utilize. And I provide them if I'm able to grab them simple enough. Now, the next section is the actual ladder or daily price guide itself. And I've collected an assortment of classic support and resistance levels, and this information you need to understand is based on the inputs that I've received and calculations that I have made based on my methods. So they may differ from others' values. In other words, how I calculate the pivot could be different than how you might calculate the pivot or how others might report that value. Just got to be aware that many of these things are a reflection of how people draw highs and lows, or they define time frames. For example, some people might use a pivot off of the action that closes at 3 p.m. Central, and others might use 3:15 Central. Others might use overnight action included. Others might include cash or day market only. So you can see there's a number of different ways that we could calculate something as simple as the daily trader's pivot. So just got to be aware of this. I'm using what I believe is the consensus value and the most likely value that the greatest number of traders will be focused on, but there can be certainly opportunities for interpretation in the calculation. So that's always got to be a caveat. Note that each daily price sheet has 4 markets, and these are generally traded together and are very much often interrelated. Sometimes these relationships might be inverse one to another. So you might see crude oil right next to bonds or the euro. And actually it's the euro's nestled in between those. So sometimes the markets will work together, such as the 4 indices, and they'll likely all be going up or all be going down, and sometimes one will work in an inverse relationship one to another. One of the things to do is to look for areas of confluence. So for example here, if I have yesterday's high and trader's pivot R1, both within a close proximity, and maybe a better example would be yesterday's open. Here is 2017.50 and R1 217.58. So in other words, essentially the same value as a tick value would come in. So that's 2 key levels at the same area. That's an area of confluence, and that will have greater power and priority to your fine-tuned efforts of targeting or initiating a trade or setting a stop. You wouldn't want to set a stop, for example, just a few ticks in front of R1 in yesterday's high, when increasing your risk by just a little bit could very well change the dynamic of that trade. So a couple things to kind of keep in mind, but it's not just levels, but the relationship of levels with the other levels that are in proximity. You should also be aware that different kinds of traders respect an area in different ways. Some people, there's a population out there that are going to be very fixated on Fibonacci levels. Others are very fixated on pivot levels. Well, when you have multiple groups or types of traders coming into Confluence, that can also be very powerful. So if you get a Fibonacci, a daily Fibonacci or a weekly Fibonacci or a key swing Fibonacci that comes into the same area as a trader's pivot or yesterday high, for example, that can be very, very powerful information for you to be aware of. So Confluence is a very important concept, and these daily price guides make it much easier for you to understand where these hidden and obvious support and resistance levels are coming together. Also note that we have key period highs and lows, like daily, weekly, monthly, trader pivot levels, key moving averages like the 50, stochastic levels, Fibonacci levels, range extensions, Camarilla pivot levels, market profile value area highs and lows, volume profile value area highs and lows, as well as calculated pivot range zones. So a lot of different kinds of levels coming into play, and on any particular day you may see some of these levels are excluded. And I'll describe this more in a few moments, but there's a lot of different pieces that can come into the construction and the compilation of these daily price guides. Note that the yesterday close is level set across all four markets. So this yellow line here is generally right about halfway down the ladder, and it'll be yellow all the way across all four of those markets for that price guide cluster. This gives you a reference point in which to compare the relationship and momentum of the different markets one to another. So very important concept, the level set of yesterday's close, the yellow bar, between the four markets. Note that the pivot range is in a red font, and you see right here, here's the pivot range high to the pivot range low in a red font. This is an area of expected support or resistance and helps to establish the initial open range bias for the day. You would certainly expect choppy trading conditions around the pivot range, a very poor area in which to initiate a trade, or for that matter even look for trading through. It's very difficult trading through that zone. So just something to kind of keep in mind, that when you're around the pivot range, the action will often get quite choppy. We're going to talk about the avoidance zone, and see this where it's light gray all the way down to light gray. You'll have a darker gray area in the middle oftentimes. This area from the top of the light gray to the bottom of the light gray is what we call the avoidance zone. And in general, it's a relationship between market profile, volume profile, and pivot range, where these areas overlap. And especially, like in this example, the pivot range is in the middle of the avoidance zone, and is also in the middle of both the volume profile and the market profile. This would be expected to be particularly choppy and very difficult trading in this zone, and the best action is often to be patient, wait for price to clear this avoidance zone, and even better, to clear above the top of the gray or below the bottom of the gray, to have a much better setup for trading. So there's a lot of information packed within these colored areas right here: market profile, volume profile, pivot range, the yesterday's close, the various color combinations, this is telling you right here, this is a very bad trading zone, and you're far better off to look for trading opportunities above and below. So a lot of information that is packed right there. So understand each page is print ready for standard computer setups, but you may need to tailor the print to your own configuration and needs. Obviously, I can't begin to anticipate everybody's configurations in their own computers, the quality of their computers, their printers, etc. What I have done is prepared these forms to be print ready and ready to go and look good on a standard configuration. An alternative is to print the sheet and then use also from the monitor. You can take your PDF and you can zoom in, these kinds of things. There's a lot of information here. I'm well aware of that. And for some people with visual or acuity concerns, they may need even larger print than what is available in the standard printed form. So you may need to take the PDF, have it on your monitor, and just zoom it up in order to make it fit your particular needs. But in order to get that right balance between the need to capture 4 markets, key data into one easy reference sheet, there is a give and take there. And I recognize it may be difficult for some individuals who prefer a larger print size. I've done everything possible to be able to use a font size in which to get the information that we want to get out, and yet at the same time find that balance between readability and and having all the information that we want. Understand that there are about 60 price levels in this guide. I started out with more than 60, and I culled down to the 60 that will actually make it within the printed form. So in general, I don't do any culling between S3 and R3, the 2 extreme pivot levels that most trading action would be expected to incur. And indeed, there's less than 10% of trading days that close outside of S3 or R3. So we are expected to cover well over 90% of all trading days with the price guides that are provided to you here. So if the market has been particularly strongly trending one side or another, I might nudge that yellow bar in the center one side up or down, and then have a little bit more room one side or another. It's a subtle thing that I will do, but bottom line, you have approximately 30 support and resistance levels on either side of the close, and you will have all the information in general between S3 and R3. So if you notice, for example, that a particular favored level doesn't seem to show one day, I may have called that line out in order to get down to the level of 60 that's necessary to be able to fit into the printing. So let's see here if there's anything else I need to review with you. Okay, well, I think that gives you a pretty good walkthrough of the daily guide. As I mentioned earlier, you might want to run that 20-minute section a couple times. You'll find that many of the things that you didn't quite catch the first time, you might very well catch the second time. The more proficient a technical analysis and day trader you are, the more likely you are already familiar with many of these concepts, and the primary benefit to you is having it all compiled and ready to go into an easy to use resource. So subscription details and what you need to know. We do have a futures package, and that contains 8 markets: the ES, TF, NASDAQ, and YM. So the 4 index futures markets, E-minis. Then the next group of 4 would have crude oil, euro, bonds, and gold. So these are two separate daily price guides, and combined these are available for $40 a month. The second package, which we call Index 2, contains 4 markets, and these are the option index markets. So the S&P, Russell, NASDAQ, and Dow, SPX, RUT, NDX, DGX, and this is available for $25 a month. The Jumbo package, which contains 4 markets, Apple, Amazon, Apple, and Netflix, are also available for $25 a month. You can mix the packages. So for example, if you're a trader of the jumbos as well as the option indexes, you can get each one of those for $25 each. Or you can get all 16 markets, all the daily price guide subscription for $75 a month as a package. Frankly, I would expect that even one trade with smarter, more aware placement of a stop or target, and you would cover the cost of this very modest subscription each month. For that matter, I'm aware of institutional grade products that sell for $500 a month subscriptions and often do not cover much of what I am providing here. Additional value does come with each package, as additional reports such as the morning report review of overnight key market statistics and economic report schedules, a market condition report covering various volatility metrics, a daily report that covers current price and volatility trends, market timing, and hedge risk level opinions. All these reports are ready to print PDFs for your quick reference all day. Now, we do understand that trading needs sometimes change. If for whatever reason after your initial 1-month subscription you may cancel at any time, and you'll have no additional charges. There's no long-term commitment or contract. When you're ready to leave the subscription, just inform Falcon Global that you would like to cancel your subscription prior to the next subscription cycle. No worries. Do note there is no proration of canceled renewals in between billing cycles, so be sure to select the subscription time frame that meets your needs. So I hope all this has provided some insight into what our daily price guide products provide. If you have questions, be sure to contact us. Of course, additional information is available on the website, as you see, www.falconglobaltraders.com. Then, of course, you can send emails to us at support@falconglobaltraders.com. And then, of course, there's an FAQ as available as well for the daily price guides. You'll find that many of the typical questions will be answered in that FAQ. And then there are also example guides for each of the daily price guide market sets available on the website for you to print off and take a look at that. Given the very modest subscription price for these products, we do not have free trials available for the daily price guide subscription products. We do have 2-week free trials available for any of our 3 live trading rooms. If you should be interested in more information about the live trading rooms, I would encourage you to go back to the website under the product area, and there's significant more information about each of the live trading rooms and their particular areas of focus. Each of the live trading rooms do have 2-week free trials available. So to subscribe, very simple. You just go to the Become a Member button in the upper right-hand corner of any of our web pages and click on the subscription package that supports your trading needs. Thank you for your attention, and obviously disclaimers are always with us. We are an educational service and not a financial advisor of any kind. Pause the video here if you need more time to read the disclaimers. And of course, we thank you for your attention, and we hope that we gave you a great overview of a daily price guide product that we're very proud of and we cannot imagine ourselves trading without. Thank you and good trading.